Hi, welcome back to our second part of transfer pricing introduction class. Now remember we talked about in the first lesson the scope of transfer pricing and why and when that transfer pricing will get involved for transactions between associated person. Now today we would like to go a bit further to look at transfer pricing documentation. Now, but before I start with transfer pricing documentation, allow me to just share with you about transfer pricing audit framework. Now, just like normal or income tax audit normal income tax audit, even for transfer pricing, there can be desk audit as well as field audit. But the scope of transfer pricing audit is usually larger, that they can cover anything from 3 to 6 years of assessment. In some cases, they can even extend it to 7 years of assessment. Now, always remember that if the Inland Revenue believe that there's an element of fraud, willful default, then they actually can have an unlimited year of assessment that can subject to audit because we do not have a statutory time bar. Now, what happened inside a transfer pricing audit is they need to look at this thing called TPD, or we call that a contemporaneous transfer pricing documentation. Now, it is called contemporaneous because this document is something that you're supposed to prepare it the very moment that when you intend to enter controlled transaction. Remember, we say controlled transaction are transactions between associated person. Okay, so they are very essential because it gives the Inland Revenue a way of assessing whether the transfer price that you've derived is regarded as an arm's length transfer price. So that's why you have to remember that this TPD, contemporaneous transfer pricing documentation, is ultimately or critically important to mitigate the penalty on transfer pricing issue during a transfer pricing audit. Now, generally, when we have a transfer pricing audit, these are the penalty scheme that can be imposed on transfer pricing issue. Now, they can charge you up to 50% penalty when you did not prepare transfer pricing documentation. Now, you can get up to 30% penalty or 30% penalty when your TPD is not in compliance. You don't follow the TP guideline and rules that the Inland Revenue has issued, or if you fail to furnish the TPD on time. I'll share a bit about the timing requirement later on. And actually, you can see that you will not get penalty as long as your transfer pricing documents comply with the requirements and also you've submitted them on time. So what is actually the deadline for the submission to the Inland Revenue? Now, the rules before 1st January 2021, the moment when they send you the letter and say they want this document to be furnished, you have 30 days to furnish this document to them. But now they make the requirement more stringent. So you actually have 14 days to submit this TPD. So that's why it's almost virtually impossible to have your TPD be submitted within 14 days if you don't prepare them. So that's why you will be bound for a 50% penalty. So that's the reason why we usually need multinationals group that has a controlled transaction to take this very seriously. Now, in order to avoid penalty, remember your TPD must fulfill the requirement of the transfer pricing rules and the guidelines, plus you must have reliable and correct information. Now, so the questions that we need to now see is whether am I affected by the scope, so that I need to get myself involved in preparing the TPD. So I'm going to share you a flow chart that was given by the Inland Revenue. So I'm going to put it up on the screen. So you are now looking at this flow chart to help us to determine the scope and the application for preparation of the contemporaneous transfer pricing documentation, as you can see over here. Now, so whether or not you need to prepare the TPD, these are the questions that you should be asking. Okay, of course, number one, are you a person having a controlled transaction? So do you have transaction with associated person? Of course, if you don't have, then there's no need for TPD to be prepared. If the answer is yes, then the next question is, do you carry on business? Because if you're not doing any business, then again TPD is not required. Now if you do have business, now then the next test is actually the crucial test that will decide whether or not you fall within the scope. Now if you are carrying on business, your gross income from your business has to be more than 25 million, and the controlled transaction has to be more than 15 million. Do you fulfill this threshold? So basically, if you're not in this category, that means your amount of transactions involved is very small. You know, you probably only have like few millions of business revenue, and then your transactions with associated person is below 15 million. You will not require to prepare what we call a full TPD, but you still have to prepare what we call a minimum TPD. You can see that? Minimum TPD. But even that, you have to see that there is good news for those who engage only in what we call domestic controlled transaction. That means your associated persons are all in Malaysia. So you are like having a Malaysian company selling to a Malaysian companies, that they actually do not need to prepare a TPD if it can be proven that any adjustment will not alter the total tax payable or the tax suffered by the related person. So what they are saying is like, if between subsea 1 and subsea 2, the transaction is like left pocket go to right pocket, no matter what, at the end of the day, the amount of profits that you're going to pay tax will not be different. It's still going to be the same amount. Then you do not need to have this TPD. They will not actually come and disturb you. Now, but if you do have to prepare a minimum TPD, right? Then what do you mean by a minimum TPD? That means you need to have a document that will show the organizational structure, the control transaction, and the pricing policies. So what is all these things? I will, like in a glance, bring you through later on. Okay, now if you have a controlled transaction that fulfill this threshold, then the next question is, do you have a controlled transactions that relate to associated person outside Malaysia? Like if the answer is yes, that means if you are talking about a Malaysian subsidiary and then having transaction with a foreign holding company, then yes, you have to prepare a full TPD. Now if again no, then the next questions that you're going to ask is, are you and all the related person chargeable to tax in Malaysia? Now if the answer is yes, it comes down. If the answer is no, then they ask you, is the non-chargeability is because that the person is enjoying tax incentive or because of continuing losses? Now if the reason that the one of these party is not paying taxes is because of incentive or continuing losses, then again you still need you're not required to prepare TPD, but you are encouraged to prepare a full TPD. Now but if it's not because of incentive or losses, then yes, you have to prepare a full TPD. Now back to this question just now. So if you have transactions with an overseas associated person and then they are all chargeable to tax in Malaysia, then you have to ask the next question, do you or any of the related persons enjoy tax incentive or suffer losses or tax at different rate where adjustment may alter the total tax payable? Now if these adjustments could cause the tax payable be different, then yes, you have to prepare a full TPD. But if not, then a TPD is not required. Now, so that will basically be a chart that will guide us to decide whether or not a contemporaneous transfer pricing documentation is necessary. Now again, I need y'all to understand that the whole idea of this short course is to help you to appreciate the need of transfer pricing's documentation, and it's obviously not a course that give you the full knowledge of what the document actually is. So at least then you will be able to understand that when you're working, for example, in a multinational enterprise, you will be able to appreciate why all these things are necessary. Now we're going to go back to our slides now to move on into what exactly is in this transfer pricing documentation. So I'll just bring you through very quickly so you have an idea like what's in the TPD all about. Now the TPD will usually need to cover sections that concerns the organization structure, which means you have to show the detail of your ownership, like a group that shows who are the shareholders, how many percent shares you have over certain companies, whether they are a subsidiary, associate. Now you also need to show your organization chart. Now, and of course, in the show of the organization charts, we need to see who are the key individuals, which means we need to look at the reporting line. Like if you have a Malaysian entities, to which persons that you will make reports to, and so on. Now then we need to have your business nature, your industry, your market conditions. Basically, it's the informations about your business. Now your history, your industry, economic, competitive, and legal factors. Things like who are your key competitors, what are the legal constraints, what kind of regulations affects you, what kind of laws that will impose some kind of restrictions on your business. Now, what kind of business strategies that you're engaging in, and your corporate business plans, especially when you have plans that would have implications on the controlled transactions. Like if you have plans to establish certain market shares or market position, and as a result you need price to be set at lower in order to compete. These are the example of business plans that you have to take into account. Okay, then of course the controlled transaction itself, like who are the people involved, the associated persons. You have to list down their names, their addresses, their relationships. You have to give the detailed descriptions of the property and services of the transaction. If you sign any agreement with the associated person, then you need to have that agreement included. And of course, sometimes you may not have the agreement. You may need to spell out the nature, the terms, the price, the conditions entered. Now I'm going to share a bit with you about what is the functional analysis in the next session. It's just a short sessions about functional assets and risks involved that support the comparability analysis. Now if there's any forecast, budget, financial estimates that's associated with the transaction, so all that will cover informations on the controlled transactions. Now then, your pricing policies, what formula that you've adopted to arrive at your price, your profit margin, your cost component. These are all very, very relevant details in affecting the choice of why a price is set. Now, who has the power to determine the pricing policy, and how often that this pricing policy is being reviewed, and then when that they will be revised, and all the supporting documents that will support your pricing policy should be included as part of your TPD. Now, the next thing that we will see is your financial information. Now, like example, the audited financial statements and even the non-audited, the draft financial statements for the latest period should be included if they asked from you. The detailed schedules that's relevant to financial analysis. Sometimes how you do your overhead analysis to support your your cost allocation, so that you'll be able to decide what is your margin that you want to derive for particular transactions. These are all things that we will cover as part of the financial information. Now there's actually a lot more information that you need, which I will not like individually elaborate them, but you have to include in things like assumptions, strategies, informations that these are all factors that they are capable to influence your pricing policy. So if there's anything of such, they have to go inside your TPD. Now the comparability, functional and risk analysis, which I'm going to cover in the next part of the video, and then what transfer pricing methodologies that you've selected and the details, the justification of why you've chosen a method will all be in. Now if you are a multinational enterprise, right, you realize that you're also required by most of the countries, including Malaysia, to prepare something called country by country report. And when the M&E are required to prepare this country by country report, right, they need to prepare what they call a master file. And then they will actually have to submit it together with the transfer pricing documentation when required, or when requested by the Inland Revenue, whether it's Malaysia or the Inland Revenue of any other countries. So for the M&E group, right, when they prepare the master file for the group, usually a copy of the master file should be submitted together with the transfer pricing documentation by the subsidiary company. So if let's say you're a subsidiary in Malaysia, then what you're supposed to do is you need to actually submit it together with the TPD to your holding company. Right, so I hope these sessions give us a quick and short summary, but give us some awareness about the TPD and how that it is critical when we have a transfer pricing audit. All right, thank you, and I hope that benefits you a little bit this time. Bye bye.